Hello, YouTube. It is nice to be back. We have a key chart here we're going to circle back and look at in a few moments, which means are there going to be new highs? We are within a few dollars with a key catalyst this week. So again, we're going to come back on this in a few moments. But the first thing for us to check in on is the last video we published about a month ago, just over a month ago. And we were talking about a new bull market, what history tells us. When we were about 0.5% off hitting a new high, where are we now? Well, we're officially in bull market territory. We got about 417.8 and we birthed the bull market. That's pretty good for the bulls, right? Everyone doubted it. Everyone was worried. Here we are. We're about 10 points higher than that bull market territory. So what this really shows is that we've stopped going down. We have an uptrend, which means we're going up. And we keep going up until we don't. So we look here to what happened on the monthly downtrend. And what's really important for me here, I'm actually gonna give you a little bit of a recipe that I shared with our group before I left as well. And again, thank you to everyone who's joined us for giving us a trial, and thank you so much for your patience over the last month. I've moved to a different province, which is the same thing as a different state. I went on a nice long holiday, and I haven't really had a break in the last couple of years, so it's been really nice to be away. But then as I'm getting back, I'm noticing that I haven't been watching the tape every minute or every day, which means I'm trying to be objective about what I am seeing happening on the chart. So there's a few things that I look for particularly to note that we are not only in defense, which means higher lows, low, higher low, higher low, higher low, 4 months in a row, four higher, sorry, let me just double check here, 403.78, 403.74. That one's technically not, but that does look like it was a trap. We closed higher. But anyway, so defense means higher lows. We have low, higher low, double bottom, higher low so far. And then we look at higher highs. Are we going into expansion? And that's what these hollow candles right here mean. The hollow candles just mean we're closing higher than we open. We managed to open the candle, meaning open the month, trade, and then close the month out higher than we started. So defense means higher lows. Offense means higher highs. And then it's just about whether or not we're going up or down. What's the dominant trend? And does the volume confirm? So right now, if we notice we have hollow candles, it means that we are in defense, we are in offense, in expansionary territory. And then the last thing that I look for here, and we talk about trends a lot, but let's just think about highs and lows and think about what that means for the expansion. So we look here, we got full green candles here, just because, again, I know for those boomer eyes, it could be a little bit easier to see. And I'm going to thank you ahead of time for subscribing to the channel and smashing that thumbs up. And here we go. So as they are full green here, what I'm just looking for is whether or not we actually close above the previous candle high. So in March, our candle high was 409.7. So going back to February, that's a pass. Going into the month of March, well, we close at 415.93. So that's a pass for May. And then going into, pass from April, going into May, well, we close higher, right? Close at the candle high. Usually means pressure is building up. What happens? Well, bit of a trap, comes back up, closes at the high. So we close above the previous high. And now for May, we closed out at 417.8. That number is not an accident. We look back here to our February high as well, 418.31. So we had it here where there's a pivot. We're technically closing right on bull market territory, just like the bear market territory, or 20% off the lows was where we found initial support. This time we're finding resistance. So there was a pivot here. We could have pivoted down, that ceiling doesn't pass or whatever. Or we decided to keep expanding, higher lows, higher highs. And that's what we've done so far. So as long as we remain above the May high, which right now is 422.58, we are in solid defense, right? Double bottom, higher low, and we have higher highs, which means we're pointing higher. I know that seems like really simple, but that's what's happening. And then the last thing I'll note here, and we will look at some more charts at a little bit later. I just want to be mindful of time because I want to make sure you get a lot of value in this video, because I'm trying to catch up for over a month of being away. Last thing here is just, we've been talking about these math numbers. So after we hit the 23% retracement, we start to wick out, which just means we have these lower tails or lower wicks on the candlestick. And that just means that dip buyers came in. One upper wick month in February, slam it down, and then dip buyers coming in again. So if we look at the math here, we hit the full 100%, roughly make it up to the 0.5%, bounce off 23, bounce off 23, bounce off 38, and now we're butting up against here. It's the 618 retracement. After that, we got our 78 and 100. I've just hidden those so that I don't have to draw support and resistance. It's basically the math numbers right here: 398.5, 414.05, and 429.60, 429.61. And those are important because when we look here to QQQ, which is the NASDAQ, we note that NASDAQ is already poking over 618 or roughly 350. Why does that matter? Well, same kind of thing here. We look at our math numbers, 290, 313, 331, 350. What happened? Well, we flag out at the first one, pop it up, bounce right off the 38, make it all the way. We just blast through 50%, make it all the way to 61, close just slightly below it. And now we're bull pivoting, at least for now, to go higher. And we are above that previous candle high from May at 353.93, but not by much. So the NASDAQ is leading us right now, which means by being above 350, hey, that's like really good. It's above the 61% retracement. It needs to also be above the previous monthly candle high for me to say that we're not just playing defense, we're playing offense. Defense for me would mean that the bulls only have to really defend 315. 316 would be a monthly higher low. And on this candle, if we hit 316 and it wicks out and comes back up, that's a higher low. It's a bounce off the uptrend. It's a bounce off our fib levels. And that's like not bad. Volume is good here as well. So the bulls are definitely in control. But let's keep in mind where we're coming from versus where we're going, because we talked about a turning point when we were down here at 290 and no one wanted to believe it. So from 290 all the way up here to about 350, there were some big levels we had to get through. We had to get through 305.12 and 326.97. 305.12 is 20% off the low, so we claim that. And then 326.97 is 20% off the high. So 327 means roughly our Fibonacci level right here. That's where, when we were coming down, the bears were right here to defend it. They defended that roughly 33 area, slammed it down. Okay, cool. All right, so that kind of makes sense. We got through it. We can see those wicks here as well, wicking off of roughly 305. Our low here is 309. We also note here that our last week, we have a bounce here off of roughly 327, 330. So, okay, cool. Well, if we're going to expand, we have to just go over it. So we talked about this chart a little bit earlier. Sorry, one more. This one here. This is Apple. So Apple is the biggest stock in the entire market. And this matters because Apple has WWDC coming up on Monday, which is their worldwide developer conference, which is when we're expecting the launch of a new AR and VR set, which is an augmented reality and virtual reality, which is going to be really important as we think about that AI play. So with everything we've just looked at, we're looking at a 12-month chart, which means this is a full year's worth of trading. As we're now roughly into the middle of the year with June 4th, I just want to see what's going to happen here. So if we're going to get a new high, there's a few things I'm looking at particularly. Here with Apple, we note that in 2021, the high is 182.13. Last year, 182.94, slightly higher high, but then, man, that's a big bear pivot. We went down big time. And right now, 181.78, which means we're basically within $1 and some change of making a new high. And this is important because it's the largest company in the entire market, roughly $2 trillion. We look here to Microsoft, not much different. Microsoft here is basically the same. So we look here, oh my goodness, that's a really tight inside bar last year in 2022. And into 2023, we're right back up here at all-time highs. So if if Apple can lead first and Microsoft follows, like, there's a couple of templates that could happen here. We could either go higher, we could stall out, or we could go lower. So now let's have a look here and see if we can assess the strength of this Apple move, because let me see if I can jump forward here to something. We have WWDC coming up. And what that means is that on Monday morning, June 5th at 10 a.m., 30 minutes after the market opens, we're going to have the keynote address for Apple. And then at 1:30, we have a State of the Union. What we're likely going to see is some way for you to use your iPhone for augmented reality. And then we're likely also going to see some kind of VR headset. That's, again, virtual reality. So that's like pretty cool. That could definitely move the market and be the hype thing, which like kind of drove Nvidia, right? Oh my goodness, look at that chart. Yes. And if you look at this one here on a 12-month chart, this one was able to power up right here to roughly 300 and then just catapulted higher. So note this chart, because this is one that passed and went higher. And this roughly 300 level here, which is going to be the real body on the 12-month chart after bull pivoting off of the lower range. What happened here on a 1-week chart? Well, okay, so we were looking at this chart internally in our group. We know here we have the inverse head and shoulders. We have a catapult off the 200 over the 50, and it just didn't look back. This right here is its earnings. So we look here to a 1-day chart. What did it do? It popped over the resistance. So comes up to resistance, comes up to resistance, gets over the resistance, back tests it. It's now support. And then it just gapped up and didn't really look back. And what's so impressive about this is that it hasn't even tested its 2020 high. It's 2021 high, sorry. So we look here back here to our 1-day chart, and we're like forming higher lows and higher highs, and we're not even testing that 350 area, which means this 12-month chart looks incredibly strong. And if we think that there's going to be more juice in the tank for the bulls to drag us higher, I think it pretty much has to be Apple to do it. Microsoft has already come in with the ChatGPT and their new search with Bing. I think Apple has to deliver this too. So now let's try to be objective, because again, what we want to try to do is to understand what the market is telling us, not here's what I want to happen, here's what is happening. So roughly triple top on a 12-month chart, roughly 180 to 183 has been the resistance area. So if we now look here to a 1-week chart, here's where I'm noticing there is a similar pattern to what we note here on Nvidia. Let's have a look here first and see what the weekly chart tells us. Highs established in December of, let me go back here, 1 week. So what happened? Let me just make sure I got the right chart here. There we go. Nope, that's not it. Where am I here? I think it's this one here. There we go. Sorry for the hiccup there. Anyways, moving forward here. So we moved to our all-time high in late 2021. So we move up to our all-time high. We hit it. We try to get through it again, double top. So hit it, back off, bounce off the 50, hit it again. So there's our first true test, our second test, our third test, and now our fourth test. This is 4 attempts. This is called strong resistance. So back here, Warren Buffett was selling into 2021. And if we note here too, the volume has been pointing down. This has been a low volume consolidation with multiple tests and a melt over the all-time high. It's not been a pump. There's been no euphoria. There's been no excitement. There's just a lack of sellers is what it looks like. Warren Buffett's like, you know what? I'm holding on. I'm going to hold on. I think he owns like, I think it's like 100, 200 billion worth of the stock. So he owns a lot. Anyways, if we now look here to the shorter term price action, what do we know? Okay, well, there's a gap on the chart. Yes, there's a gap. So we note this really strong resistance area. There's also that gap like we note here on Nvidia. So for me, for us to continue to go higher, I really need to see Nvidia hold up and for Apple to join the party. We also talked about things like our golden cross, and that has led to a lot of momentum. Again, a golden cross just means that it's a moving average crossover. So it's similar to a MACD. This is just a more manual way of looking at it. We look here to Apple previously. We get a death cross, which means we get over and reject. It actually happens all the way back here. And then we get a rejection on the MAs. It's a lagging indicator, but it was a pretty good predictor of a period of weakness versus now where we have a period of strength. So is the strength going to continue? Well, we know we have to see volume to confirm the move. And what I need to see, I need to see that gap stay open, and I need to see us actually punch over to 184 and higher. Otherwise, we're at risk of pivoting back down, and the rally might fizzle out. And that's really important here for QQQ, because as we know, like we're resting right around the May high. If we're going to continue to go into offense and not look for defense means we're going to be moving lower, looking to form a higher low. We better make sure we stay above 354. We only got about $1 cushion. It's not a lot. Look here to the weekly, right up against resistance, March higher, 6 weeks, back-to-back higher highs, higher lows, look strong. On the daily chart, there's also a gap here. So I've updated the lines. We note that we have pretty strong support here at 350, as we just noted. I'm noticing a gap here too. So if we can gap fill here, that would look really constructive. The low is 350.5. Sorry, the low here is basically 360, 35993, and the high is 357. So if we make it to 357, $1 off on our Friday high, and start entering and filling that gap, looks pretty constructive. All right, I think there was a few more things I wanted to get through, but let's just bang out all of these loose items, housekeeping, and then we'll come back and look at some more charts. But actually here, I'll give you a preview to make sure you want to watch all the way through. Let me see if I can just do this here. So I'll show you some charts here. And as we alluded to with Apple, we're now going to look at supporting evidence. So we've talked about the technicals, a little bit of fundamentals. But as we're thinking about this chart and it's being so close to getting to new all-time highs, we're going to look at 2 charts here because I think this could really help us understand what could happen here. First one here is going to be the DAX. And the DAX here, this is Germany. So this is the German stock exchange. We note that every time we get up to this roughly $16,000 area, we have upper wicks. This is an annual chart. Okay, well, DAX is at new all-time highs. It's going into recession, so why can't the US do it too? Well, it could. The problem here is that this is now a false breakout on one time frame lower on the monthly. So here's what we don't want to see, because this means that there is price discovery higher, as we had back here in November and January of 21 and 22. But then we don't hold. And what happens? Oh my goodness, that's a slam. So we get up, can't hold it. Get up, can't hold it. Boom, there's the slam. There's the big move down. So this is technically a higher high, technically a higher low on our 12-month chart. But this is not constructive, as we're only halfway through the candle session, or about June, or 6 months. So after we see the false breakout, but we're still holding higher lows, we've made the higher high. We have completed the offense. We are holding defense. But we now need to also make another higher high. We have to go back into new all-time high territory, or we got to wait for the next candle. Can we get another higher low and another higher high as we build up pressure to try to release it to the upside? That's what it comes down to. So this right now, both teams can look at the evidence and say, I have a winning case here. I see what could happen. But if we now look here at a 12-month chart for S&P, this is what I tried to share on Twitter at the beginning of the year. I'm not sure if I have it handy here. No, I don't. But I remember I shared at the last part of the year, where if the 12-month candle goes green, it could go big green. We've already got our annual year-to-date returns of roughly 12%, and it's June. We look here with the real bodies. Okay, well, lower real body, roughly 380, upper real body, roughly 470. So the DAX is already up here. It's already poked over. It's like basically 500 for a SPY. Can the S&P get there too? Well, we're in bull market territory. We're pointing higher, and we go higher until we don't. So let's look back here to our 1-month chart. And that's where this becomes so important, because it tells us whether or not we're building up steam to go for that higher high test, or if we're just waiting for the inevitable collapse, meaning this is a monster bear market rally, and we're just going to fade lower. Look back here to our 12-month chart, look at QQQ. And this is important here because, well, QQQ is making more progress. And the only real friction is going to be right here at about 400. So big round numbers, big areas for us to test. And then the chart, which shows us another failure, or where more pressure has to build up, similar to the DAX, it could be something like this, where we have, this is GC, so it's the gold futures. We look here to our 2011 high. What do we do? Well, we make it to the high. That's in 2020. We can't hold it. That's why we have these upper wicks here. These upper wicks just signify price discovery higher and a failure to hold it. So it means we are going up. It's just not holding the new highs. So right now we're trying to get there, but it took 4 candles for us to now build up pressure to get back there. If we look here to a 1-month chart, it just means it's a frustrating sideways chart pattern. So we go here, hit our high, back off, hit the high again, hit it again. It looks like Apple. Multiple tests. The highs multiple tests are established here at about 2100, and it's just not getting momentum. So up, 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 volume's dropping off. And what happened on the last big test? Well, it went down. So what does it form? A higher low. It's still strong on the 12-month chart. I know this stuff might be confusing for you. So all I'm trying to show is that if you're looking at the daily or weekly, we will look at those this week. But what I'm really trying to focus on is what could drive this week. And that is really Apple. And with that upper gap, we note the template, Nvidia, we note the template from the DAX, or the failed one that we saw in gold. What's it going to be, right? Make sure to drop me a comment and tell me what you think as you are smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. All right. So part of the reasons why we were looking for the new bull market was because we were within 0.5% of getting there. And this was one of the reasons why I believe this was shared by, actually, I forget right now. This was shared by KRAV, sorry. So KRAV shared this. Thank you very much. And it just shows us that when we close the first quarter out, right, full year has never been lower. S&P returns after a more than 7% gain in the first quarter has always been up. In 1987, we closed lower than we opened, but it was still green. So like it was looking pretty good. We look here to the GDP, which has been a big thing. I think the bears are trying to say, well, if we go into recession, that's when the market fades. Well, we kind of talked about this too. Was that the recession in 2022, first part of the year? Stock market bottoms. Now we're going higher. Well, they don't want to call it a recession. It was an election cycle, right? Midterms. But here it looks really soft. And now we're expanding 1.9% for the second quarter. That looks pretty good. Here's the problem. So right now, the quarter is going to end in June, and then July is where we kick off Q3 or the third quarter. And because we're comparing year over year, the strong quarters we have to beat next year are going to be Q3 and Q4. But I know this is confusing, so I'll just make it really simple. A recession is technically defined by 6 months of contraction, which means 2 quarters. So it can only be confirmed at the end of the second quarter, which means technically we can only confirm the recession is there at the end of the fourth quarter of this year, which means what? December of 2023 is the earliest we could confirm the recession. So if the stock market bottoms before that, we would have to probably see starting to go into red, which is telling us we are going into recession, not we are in recession. Until then, we're not. It's not happening. That's why the charts are expanding. We also note here seasonality is 100% in play. So we're going to look here to a couple of charts. Let's go here to S&P on the weekly. So we look here on the weekly, and again, let's try to be objective. Objective because we want to make sure we're seeing what is truly being told to us, not am I seeing what I want. So as we close out April here, incredible run into April, right? Boom towns, baby. Woo, go higher, form those higher highs. We have some lower wicks here too. So all these lower wicks just signify dip buyers. Dip buyers keep coming in. They keep buying it up. We form a new uptrend, and then we claim the bull market territory at that 417.8. Now we're up by about 10 points over that. So that's a really important area, 10 points higher. And to try to finish the story off here, into May, we have we form a higher high, and then we come down, form the higher low versus the previous month. And we've talked about this too in March. Low. Let me just take a screenshot here. I think this might be easy and important for us to clarify. This is not a Bible. It's not a guarantee, but it's a pretty good working template. March, there's the low. March, April, right? May, June, July. We keep forming higher lows. On the monthly, we showed you. There's the double bottom, right? Close enough to a higher low. And we have to keep forming those higher highs, which is an important recipe I said that was missing. We got it. Is it going to keep holding? Well, June tells us a pretty clear story here. Okay, right. Dr. Doom, come in and tell me why we're going to get those nasty cuts lower. Well, I told you, Apple. That could be the first part higher, and then we get the cut down. Well, I don't know if that's going to be just to buy the hype, sell the news on Apple. We could rally up here into roughly mid-June, which is when we have the FOMC, and then we get a whatever, an S&P update or a hike or whatever. Market goes down, and then boom, just goes higher. Another win, another W. But there's some pain in the meantime. June goes low. It goes almost all the way back down to the May low. So if the May low here is 404, are you going to get scared? If we come down to 404, 405, 410, or are you going to be excited? That's what you have to think about. That's why I keep talking about the over the previous monthly candle high, over 423, because it means we're still in offense. We're not playing defense if we're bulls. We're in offense, right? Bears are losing in defense and they're losing in offense, which means it's on the bears to get us minimum back below 422 and to minimum form a lower low. That's not happening yet. So until then, we have to be prepared for this. I could see it happening. Up into Apple, dump it down, sell the news, dead cat bounce, form a double top versus our May high, 422, which is what I just mentioned. Failed breakout happens. We go down on the Fed, and then they just buy it all the way back up. Why would they buy it all the way back up? Well, because there's a whole bunch of buyers which are just piled in here. Look at the short positioning. It's at 434,000 contracts. That is huge. The big short continues to grow. It's higher than it was in 2011, 2015, 2020, 2022, and they're so stubborn. We look here, it just keeps going bigger and bigger and bigger, growing and growing and growing. And the reason why this is important is because there's always a shakeout. There's always going to be people who are willing to cover at a higher price than the people who were lower. Look at this, right? 2020, right? We start to see some covering, which means we get less of a short. Big short is done, and then boom, that's when the market goes up. Same thing happens in 2018. Going back here to 2015. We know we get a shakeout here, right? Extended period of shortness. We get a shakeout. It grows until it stops. We're not quite seeing that yet. There's still fuel for these bears. So what I want to think about next is going to be what we were also talking about in terms of monthly charts. So where the bulls are. Here's what I said, that's Justin, on April 12th, almost 2 months ago now. So the rally clearly isn't real and no one wants to believe it. So what's the next thing we worry about? I'm asking for a friend. And I made this as a joke. I made it intentional, and I'm using that word worry intentionally. Why? It's called the wall of worry. So now what I want to go through is an update on some psychology charts to see whether or not what we're noticing in the psychology or the fear and greed is lining up with what we're seeing here. So Slope of hope means that as we're going lower, people are still bullish. We're forming lower lows and lower highs. And this is a QQQ overlay. So QQQ overlaid on our where the bulls are. It's very, very good here, right? We form those lower. Sorry, it's very it's repeating the pattern here. It's respecting the trend. Lower highs, lower lows, some nasty cuts. We carve out the bottom. W was formed, and then we start to go higher. But here's where the problem is: we're not seeing any lowers. We're not seeing any moves lower. What's important here is we form those traps. We look here to our monthly chart. We look here to QQQ. We look here on a hollow candle because all we're doing is expanding. And on the move down here, the reason why it was a slope of hope was because there were some months where we actually go higher, 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 higher. Inside of our nasty red months, right? There's a mix of red and green. Well, since we formed our bottom over here, there's not really been much red. There's the one red month in December, and then we closed down like, I don't know, 1 point or 0.3, and then hollow, 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 hollow. There's been no contraction. So there's been no contraction. Are we going to get one? Well, I think we're going to get one at some point. Market's not just going to go straight higher. Is it going to be here? Is it going to be later? So what I want you to really think about is what the psychology of people who are out there is. Are they bottom feeding? Are they bargain hunting? Are they playing momentum? Are they premature eradicators? Are they profit takers? Or are they performance chasers? AI is like old now. ChatGPT is around for months. We heard about AI. We heard about Palantir now, right? Palantir's doing good. Microsoft. We heard about Google coming back. They're barred. All the stuff. So Apple's the big dog. Apple needs to form that high. If we're going to keep hyping up and we're going to inflate the bubble bigger, Apple has to deliver. I think they will. Headset's supposed to be $3,000. That's a lot. That's a premium product. And here's what I want you to also think about. So the angle of ascent. The angle of ascent here is, right, it's a believable slope of hope because people want to believe it. As we're going higher here, I don't see anyone worried. I see bulls who are euphoric over a handful of names, and there's nothing wrong with that. The index is doing well. I don't see the psychology of people who are bargain hunting, playing the momentum, or even profit taking. People are performance chasing right now. That's what I'm noticing, and it lines up with the chart. So I have to kind of believe it. I look here to the fear and greed, and this is important because here we're going to get an update on our SP500 monthly log scale overlay, which I've also shared on Twitter, so you can follow me there if you want to see the updates. So here we note that we're going into complacency. We have to just cool off for the next big rally. And into the end of last year, everything was up except for tech. So if we look here to QQQ divided by DIA, that was a rally which was led by, let's actually go here to a 1-week chart because I laid this one out as well. Tech was really underperforming, really sagging into Q4, and everyone hated the market, meaning S&P. It was at 410, now it's at 420. Well, everyone loves this rally year to date because it's tech. Oh my goodness, from 0.7 and change, 0.79 to 1.08, tech is just drilled higher. It's way outperformed. So everyone loves this now, which is why I see the potential for performance chasing and for the broader market, meaning the S&P, for there to be complacency. One more big clue, which is also in the title that I laid out, is this right here. We look back here to, this is the fear and greed, and we note that on every previous drop for the market now, let's go back to here, S&P 1 week, every previous drop, as we're coiling up, what's really important is that we form those higher lows here on the weekly. Again, low, higher low, higher low, higher low. We keep going up, but the fear and greed actually is also flagging out. So we know we have these big waves higher, big waves lower, and then we start to flag out here. We haven't flagged out. It's either greed or fear, greed or fear, greed or fear. Now it's grinding. So it's really grinding it out here, which for me looks eerily similar to complacency. We're grinding higher, making those marginal higher highs. We're right around resistance here at about 430 on SPY on the monthly. And I'm noticing the grinding. So if we form a lower low, meaning we get a daily close below 62 on greed, that is the warning for me. 62, I would really say like below 59. So if we get like 58, 55, something like that, that just tells me that we're maybe going to be going down for a wave lower. Until then, the bulls are grinding it out. We're waiting for the next catalyst. That's what I think we're looking for, Apple. So that one's lining up. And then I have an ARK one here too, because, oh man, this looks eerily similar to ARK here, right? All the way in anger, right? This is where I think we are, right? Depression. Oh my God, my retirement money is lost. How can I ever pay for the stuff I bought? I'm an idiot. That's what I don't think people are quite there yet. I think people are really angry that Kathy doesn't have the right stocks in her portfolio. Oh, she has the losers of the AI move. But the psychology is pretty much lined up. So there's still a lot of period of pain here for ARK. Everything seems to be roughly lining up. And for the bears as well, what I would note, in addition to the ES big short that I provided there, is that the majority of a decline, if we're still in a bear market, if you still believe this is a bear market bounce, they occur after the Fed has a pivot, not a pause, a pivot. So previous times, going back to the 1970s, Fed funds get cut, or we have a big pivot. And that led to 36, 48, 27, 51, 58, and 35% declines. So if you're a big bear, I encourage you to wait until we get some confirmation. If we're over the previous monthly candle highs, like there's nothing to confirm the bear technicals. Fundamentally, oh yeah, we're bear. And here's a little bit more evidence. So as we look here and here we're looking at the heat maps for the S&P 500 to understand the breadth and depth to this market in a different way that we can from just purely looking at a heat map. Here, give me one more second because I think this is important. So looking at the S&P year to date, what's important here is that year to date, there's like a handful of names which are doing really well, and a lot of them aren't. So we got like, if we just go big block, small block, we go no group. Okay, big blocks do good. Rest of the small blocks are not really doing so good. So what does that mean? Well, it means the performance has been dense inside the last few names. Let me actually show one more chart here. Let's look at 1 month, and let's go sector. Because in the last 1 month, well, yeah, the market's doing good, but it's Apple, right? Sorry, it's double digits from Microsoft, pretty much there. Apple almost 2. Nvidia, Meta, Google, Amazon, Tesla, right? Other than that, pretty red for the last 30 days. So market's up, but let's be mindful of what's driving it and if we're currently in offense or defense. And for the bears, here's what I think could be something to be mindful of for the future in earnings recession, which would mean during the next earnings cycle. We just finished this one, so you got to wait till the next one. Current PEs are high. We note here if it's deep red, it's over 30. So all those names which are chugging higher, Amazon, Tesla, Microsoft, Apple, they're all deep red. Most of the market is deep red. Look here to a forward PE or the forward price to earnings, which we can see right here. Forward PE shows us that it's the stocks that are rallying right now, which are the most expensive. Tesla, Amazon, Microsoft, Apple, Nvidia, that's normal. Growth stocks command a premium. The question is whether or not they can grow into their forward earnings. Why? The market is a future discount mechanism. So it is already discounting the future. It is already assigning the growth. Nvidia here at a forward PE of 37. Is that reasonable? Is it expensive? Well, that's up to the market to decide. It's not up to me. But here's something else we want to keep in mind. Analyst recommendations. Everything in the stock market is a buy, but forward PEs are high. Current PEs are high. And then the last one to look at here is the price to earnings growth. What is the PEG ratio? Well, look, it's red. Anything above 1 means it's not cheap. Below 1 means cheap. Over 1 just means expensive. So if most things are red now, for forward PE and for their price to earnings growth, what is a PEG ratio? What's a good PEG ratio? This is from Investopedia. What is considered a good PEG ratio? In general, a good PEG ratio has a value below 1. Okay, why? Well, because it means that their price to earnings growth, their growth on their price to earnings. A lot of companies buy back their stock, which makes it look artificially strong, but the actual price to earnings growth or tomorrow versus today, it's not bad. But a lot of stocks are overpriced. Amazon looks cheap here on a PEG ratio. Amazon's growing its price to earnings, whereas companies like Google and Meta buy back their stock. Microsoft and Google are just getting earnings expansion. All right, so I know we went through a lot in this weekend's video, so I want to give you guys a big thank you if you watched all the way until the end here, because there's a lot more I would like to go through, but thank you for the support over the last month. Thank you to Mason for holding on to the reins as I've been away. And I look forward to seeing you for our regular scheduled uploads starting right now. So thank you so much for tuning in, and I will see you on the next one.